Stock market's under a huge amount of pressure and it affects absolutely everything. Is it because of a loss of confidence in South Africa after another first quarter Ramaphoric market activity? We've hit the election, and since the election, markets have been on a slide. Something of a delay, perhaps, in announcing the cabinet may have had an impact. Certainly it appeared to weigh on the currency. But corporate South Africa can't blame everything on politics or the environment. In some cases, companies have shot themselves in the foot by going offshore and making expensive acquisitions and burning through lots of cash that they never intended doing, but they didn't do their homework properly and it got burnt really, really badly. We're the investment analysts, those are some of you, and we're the executives who pay big fat money to run these companies on behalf of ordinary investors. Paul Theron, are we paying investment analysts too much? Are we paying chief executives too much?
The former no, the previous
But you know, people bought into Steinhoff, and half the market loved Steinhoff, half the market didn't trust Steinhoff. That half was right. Yet investment analysts keep pumping ordinary investors' money into sometimes dead-end companies and sometimes companies that are just massively overvalued.
Look, Sessile's an interesting case because they had tremendous cash flows from that Synfuels business here in this country. Beautiful business, one of the best in the world, fantastic margins. They looked globally at the market environment and they said, you know, we've got this great gas-to-liquids technology. We can take cheap natural gas in the Gulf of Mexico and turn it into plastics and maybe even transport fuel, because there was a huge gap between crude oil and gas. And they said, even if, you know, the market moves against us a little bit, it'll still make tremendous money. That place, Lake Charles, if you look at it on Google Maps, looks like a place you wouldn't want to spend 15 minutes, let alone 15 years. It's got very low, it's always muggy and hot. It looks dreadful. But the plant went up, and Sessile has got tremendous project planning skills. They always prided themselves on this. So it is deeply disappointing that they've spent so much money and they've gone over by so much, because that's kind of like their selling point, that they never did that. Whether or not the CEO was overpaid, whether the project managers made a mess and someone should be fired, I mean, that remains to be seen. Personally, we're not invested in Sessile. We don't like the variability of the commodity cycle. But I don't know what to say other than that, you know, mistakes happen. And that's why the share price came down, because now you have to factor in all that extra money and the margins maybe weren't so good.
Fair enough. Mistakes happen, that is markets, and ultimately valuations come down to a reasonable level.
Sure.
But we've made a lot of mistakes in the last market. Too many companies making too many mistakes. Most often as a result of a fear of being exposed purely to South Africa. We've just seen so many companies taking good hard-earned South African money and spending it internationally and not spending it well.
And shipping it abroad. Indeed, I think one has to take a look at the general rhetoric within the country. There was always that fear. I think the last 10 years there was a potential, and in fact it goes beyond that. There's just been this move to try and diversify away from the rand. And if you take a view long enough back, emerging markets have really outperformed. They somehow managed to find a way to reinvent themselves, and we know there's a growing class of people that are slowly starting to develop and get into sort of a new lifestyle. Now, to go into rather mature markets as we've done as corporate SA and expect to find that level of growth, I think we were also disingenuous to ourselves.
By way of example, here's a quiz for either of you, and I hope you get it wrong, although it's a weighted question, so you'll get it right. And that is, if in August 1996 you'd put 10,000 Rand into Amazon.com, it's this online little bookshop thing that was starting out, or into a South African startup run by a 50-year-old guy who'd been fired from his last job by his best friends called PSG, where in the last 26 years, in dollar terms, would you have made the most money?
I'd like to say Amazon, but I've got a feeling that the answer is PSG.
The answer is PSG.
Damn.
By how much? By how much? I mean, Amazon.com, 31% annual compound annual growth rate over that period of time. PSG, 36%. Amazon.com,
sure. But I don't think you should be generalizing based on
$3 million. PSG, worth $5 million over that period of time.
I'd like to put my neck out and say that I think in the end, companies that went global will do well out of it. I think Discovery is going to be a future giant. I think Stephen Saw is going to pull Aspen out of the hat. I think Sessile's plant in Lake Charles will eventually be a positive contributor. I think you must back yourself but the timing has not been easy.
John Maynard Keynes said, in the end, we're all dead. How long have we got to wait for this? Do you have the same level of confidence in South Africa? Because we've prided ourselves on management capacity and management ability. SAB Miller, best example of exporting management talent all over the world and doing exceptionally well out of it. And we've had some great managers do great things. Am I being too hard on South African companies that have globalized?
No, look, I think there are standout examples of where we've really got it perfect to the T. But just to come back to your Amazon example, I think maybe one has to look at where Amazon was making that money. I'm not saying all of it was in emerging markets, but I imagine there might have been a large portion of EM contributing to that growth. But in defense to what Paul was saying, it's a phenomenal idea. It's just where the market was going. And going back to PSG, they did extremely well, under the circumstances. Now, so you're asking, are we being too hard on ourselves? I think just the inability to realize when we were out of our depth and do proper due diligence on some of those offshore investments that we made, that can't be excused for so long.
I mean, another market darling, Brait, well, ex-market darling. I mean, that's seen as the value destruction was huge. Another profit warning out of them fairly recently. Famous Brands just this week, on Wednesday, came out with another set of results showing again a decline in earnings. This was a company that was doing perfectly in South Africa, went overpaid for some hamburgers in the United Kingdom. Another example of overextending, overbuying, and literally biting off more than they could chew. And massive write-offs there. Although the signs of life, that's recovering a little bit now.
Maybe. Yeah, there are some other examples which haven't failed yet, or maybe won't. Bidcorp is interesting. That's global food services, still seems to be doing pretty well. Discovery, I mentioned earlier, which has got all these international alliances.
It's still only 2% of their earnings, though. Global earnings.
I hope we'll do more. And obviously that Chinese venture. So, I mean...
And there's Naspers with that little investment they made in 10 cents.
Thank you. Thank you.
There's that little one.
No, don't forget that. I think it stands right at the top in terms of proper execution.
Yet
and
there,
foresight.
Absolutely. But there again, buy the stake and let Pony Ma run his own business, and you sit back and reap the rewards of it.
Sometimes with internationalization strategies, and specifically with the timing of market cycles globally, for CEOs, it's better to be lucky than smart. Because sometimes people are smart and they say, look, this hamburger business is really tremendous, but it just is an absolute mess.
And then Britain votes to leave the European Union and confidence goes for a nose.
I would rather have a management team which backs itself to build a good business here and globalizes at the right scale and at the right time. And I'll take my chances. But you've got to be pretty patient, because in addition to all the other cycles, you can just have, difficulties in the foreign markets. We haven't even mentioned Woolies in this conversation. They're going through their own nightmare in Australia. But I'd rather be a holder of stocks like these. I know it's tough when they're down 15%.
Let's talk about opportunities. Let's talk about opportunities in a moment, because valuations are at depressed levels relative to recent performances, all the way through what we now refer to as the lost decade. People were prepared to pay a fortune for South African companies. Suddenly, as there is hope that we are not in the lost decade anymore, that there may be an economic turnaround, see all those sort of caveats and sort of stops put in there. But now everyone's selling. It seems mad. Let's talk about that in a moment. Taking stock this evening here from the best stacked offices in Rosebank in Johannesburg. And we have to talk about the plants as well in a moment.